Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jiangsu Expressway Company Limited annual report. Jiangsu Expressway Company Limited offers a diverse range of businesses and services. At the core of its operations are the investment, construction, operation, and management of toll roads and bridges in China. The company has a vast network of expressways under its control, including major routes such as Shanghai-Nanjing Expressway and Ningcheng Expressway. In addition to road infrastructure, Jiangsu Expressway Company Limited also provides various supporting services, including passenger transportation along the toll roads. This comprehensive approach enables the company to cater to the needs of travelers and commuters using its expressways. Beyond transportation services, the company has diversified into other sectors such as advertising, agriculture, and technology promotion and application services. It also generates and sells clean energy power, further expanding its portfolio of businesses. Furthermore, Jiangsu Expressway Company Limited engages in the sale of petroleum products, operates service zones, and provides property development and management services. Overall, Jiangsu Expressway Company Limited has established itself as a multifaceted business entity with a wide range of activities that contribute to China's transportation infrastructure and economy. Jiangsu Expressway Company Limited market capitalization of 69 billion is significantly larger than the average industry peer of roughly 3 billion. This shows that Jiangsu Expressway Company Limited holds a significant advantage in their industry. Jiangsu Expressway Company Limited trades at a higher price-to-earnings ratio of 9 times and a higher price-to-book ratio of 1.09 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 45% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.48%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be summarized into several key points. Revenue growth is primarily driven by the increased self-service ratio of toll lanes, which has improved peak vehicle throughput and response speed. Additionally, the company has implemented various strategies, such as adding multifunctional service counters at toll stations, implementing customized schemes for logistics and oversized transport customers, and optimizing procurement systems. The company has also invested in digital and intelligent empowerment, green and low-carbon development, and reconstruction and expansion projects. Furthermore, the company's toll road income has increased by 0.29% year-on-year, with Shanghai-Nanjing Expressway toll road income increasing by 4.93%. The sales volume of oil products has also seen growth, as well as revenue from charging business. The company's electricity sales have increased by 2.03%, and obstacle clearance business has seen a 4.48% increase. On the other hand, revenue decline is primarily driven by a significant decline in Q3, with a decrease in annual revenue of 12.54%. Excluding construction revenue, operating revenue decreased by 1.61%. The company's ancillary service business has also seen a decline, with oil product sales revenue decreasing by 4.89% year-on-year and charging business increasing by 100%, but with no previous year data for comparison. The exemption of tow truck and crane fees for expressway road clearance and rescue services in Jiangsu province has also contributed to the decline in obstacle clearance business. Investment income has decreased by 29.52%, and construction income has decreased by 12.54%. The property business has seen an 81.43% decline due to smaller scale of property project delivery by subsidiaries, while construction business has seen a 24.94% decline due to year-on-year decrease in capital expenditure on road and bridge projects. Overall, the company's revenue growth is driven by its ability to adapt to changing market conditions and invest in digital and intelligent empowerment, green and low-carbon development, and reconstruction and expansion projects. However, the company still faces challenges in certain areas, such as ancillary service business and construction income. The net income of a company increased by 9.6% from RMB 3,088,700,573.87 in 2024 to RMB 3,394,227,021.02 in 2025. This growth can be attributed to the overall increase in profit margins, which rose by 1.9%. The operating profit margin specifically saw a significant jump from 47.1% in 2024 to 49.8% in 2025. However, not all segments of the company experienced growth. The Longtan Bridge and Zidai Expressway segments saw decreases in net income, with the former experiencing a drop of $27,592,506.52 and the latter experiencing a drop of $1,355,218.69. Additionally, certain business segments such as real estate development and sales of electricity experienced declines in profit margins. The decrease in profit margins for specific business segments can be attributed to various factors, including changes in market conditions and competition. Despite these setbacks, the overall net income and profit margins of the company remain relatively stable, indicating a resilient performance. The company's financial performance is a key indicator of its overall health and stability. One crucial aspect to examine is the generation of positive operating cash flow. According to the provided data, the company has consistently generated positive operating cash flow over the past 5 years. In 2021, the net cash flow from operating activities was $5,702,769,303.25, indicating a strong start to the period. Although there was a slight decline in 2022 to $5,527,921,046.44, the company's performance rebounded in 2023 with an increase to $7,392,424,081.75. The following years saw a more stable trend, with net cash flows of $6,316,202,433.54 in 2024 and $6,761,638,748.35 in 2025. The consistent generation of positive operating cash flow is a testament to the company's ability to manage its finances effectively and generate sufficient funds from its core operations. This trend suggests that the company is well-positioned to continue its growth trajectory and meet its financial obligations. The company's financial performance has shown a positive trend in terms of debt and interest expenses. The data suggests that the debt level has decreased significantly, with a notable reduction of RMB 862,649,890 as mentioned on page 46. This decrease is further implied by the reduction in total interest expenses and income on page 97. Furthermore, the company's interest expenses have also seen a substantial decline. On page 68, it is reported that there was a 12.9% decrease in interest expenses from RMB 963,483,489.08 to RMB 838,994,863.39. Additionally, on page 97, the interest expenses decreased from $963.5 million in 2024 to $838.9 million in 2025. These reductions indicate a significant improvement in the company's financial health and ability to manage its debt obligations. Management is expressing confidence in the company's future development, particularly with regards to its investment in Bank of Jiangsu. This suggests a positive outlook for the company's growth prospects. In terms of strategy, management has outlined a new four-pillar business structure that aims to integrate the company into the overall development of the Yangtze River Delta region. This structure prioritizes high-quality development, capacity expansion, and quality improvement, while also emphasizing the importance of ESG philosophy and green low-carbon operations. The goal is to build a new industrial pattern with a solid core business, optimized structure, and green low-carbon operations. Additionally, management plans to improve road network layout, strengthen synergy within southern Jiangsu region, and deepen digital and intelligent transformation. Overall, the company's strategy appears to be focused on sustainable growth, innovation, and integration into regional development initiatives. The company has a history of paying dividends to its shareholders. According to the provided information, the company paid out significant amounts in both 2025 and 2024. In 2025, the total dividend payout was RMB billion, 468,496,275, while in 2024 it was RMB billion, 367,741,325. The per-share dividend also increased from RMB 0.47 in 2024 to RMB 0.49 in 2025. This indicates a consistent commitment to rewarding shareholders through dividends. There are indications of potential issues within a company's operations. The sales costs of inventories saw a significant increase from 2024 to 2025, rising by 15.7%. This could be a sign that the company is struggling with inventory management. Furthermore, operating costs and depreciation and amortization increased substantially from 2023 to 2024. A similar trend was observed in the following year, as depreciation and amortization continued to rise from 2024 to 2025. These increases may point to inefficiencies within the supply chain or inventory buildup. Additionally, a notable increase in non-current assets other than long-term equity investments on page 94 suggests that the company may be experiencing issues with inventory management or supply chain disruption. That concludes the financial summary for Jiangsu Expressway Company Limited. Feel free to comment below, and I will be happy to answer them when possible.